Hello guys, in this video I will try to see why swing trading is better than day trading and investing. Okay, now let's begin with day trading. Now this is the day. Let's say this is the candlestick of the day. This is the open. Let's say it is a bad day. It means the price has been going down, so it's red. And this is the close. This is the low, and this is the high. This is like a typical day. For example, it opens. Let's say it opens at $10. Just an example. It goes in the morning, like half an hour, it goes to $11. Then it goes down to reach, let's say, $9. And the close here, it goes up again, $9.50. Now, since the stock begins with $10, this is the open, and the close here is at $9.50, it means it's going down, so this candlestick is red. Okay, it's red. Now if you are a day trader, you should make money and you know the direction, because sometimes you think that the day is good. The day begin at 10, it goes to 11. You begin to buy, and then one day stops, it goes down very quickly, so you lose what you have, and then you will never know if it's going down to short the stock, okay, or it will be going up. So in this confusion, okay, day traders are always, I'm not saying that they are always stressed out. They are stressed, confused. Because right now in the day trading, it's changing. There are a lot of softwares. Okay? It means that you are trading with machines, with other stupid people, with beginners, with professional, with hedge fund. So it's all messed up. Someone is shorting, someone is going long. So this is the battle from the day traders. Okay? So the direction, it is not clear where the day is going. Sometimes it's going up all green, all the people begin to buy, and then after 20 minutes or half an hour. So day traders should be very active, okay? Searching a lot, searching for news, following any information about the company. It means they are doing a lot of stuff in order to do their job. And they should be in the morning ready to take actions. If it is a bad day, they should short the stock. If it is a good day and all the market is going up, they buy a lot in order to make money. But still, they will take just a little bit of the day if they make money. They will take little from this price. Okay? Let's say it goes to $11, and then a day trader saw that the stock is going down so quick, so he began to short, and from 10:30 he goes to 9 to 10 or something. He gets 50 cents or 70 cents. This is if he knows the direction. Okay, that's why they should buy a lot of shares in order to make it as a day trader. So it needs a lot of work, this day trading. That's why for me at the beginning, my first year, second year, I was doing day trading, and I see that it's a lot of work. And then when I have read some books, I saw that a lot of day traders, they change to swing traders following trends. And I tell myself, why should I compete with all these people who don't know the direction? Sometimes in the day it's like this, okay? Going up, going down, going up, going down. You don't know what is the direction of the day in order to make some money. And it was very, very hard with the introduction of softwares and trading softwares and a lot of things that happen, and it becomes a lot of work. Okay? Now, and another thing that day traders, they spend a lot of commissions. It means they buy, sell, buy, sell, buy. This commission is too much. Now, I will give you another thing. Okay? Now, for swing trading, let's say this day is, because we use green days, we don't use the red okay? So, it's green. Okay? A green, what does it mean? It means it is just from yesterday, it was like red. Let's say it was red or something. Green, it means that this day is good and the price is going up. Let's say the stock is $10 when I buy the stock. What should I do? If it goes down to my stop loss, I exit the trade. Automatically I exit. So I lose always little money when I am attempting to find an entry to the trend. Let's say I succeed. This stock from $10, let's say it goes to $17 in 2 months. Okay? So, what did I do? I do only one buy, one sell. In these 2 months, the day traders, how many buys and how many sells he will do? A lot. So he will spend too much money just entering and exiting, entering and exiting. Now we will follow a trend. Like swing traders, we follow a trend. What does it mean, a trend? It means there is an activity of the stock. It will be very, very active. It's not slow as before. It continues to go up, and you see that it's going up and up, higher and higher and higher. So here 10, here is 13, here is 15, and then here is 17. So all my money accumulates because I wait for the trend. Trend going up. Okay? Now when the stock doesn't give no money and it goes down, I exit and that's it. So a swing trader or swing trading, okay, is just to follow trends. We follow this trend. We do only one buy, one sell. So we don't have more expenses. It's like a business. We don't have a lot of expenses. It's just $5 when we buy, $5 when you sell. So all my expenses is $10. But day traders, if he stayed like 2 months trading, like let's say 50 day or 60 day, okay? If he is still doing commission, so I'm spending $10 in 2 months. Let's say I do one trade, and he is spending a lot of money in commissions. It means he is feeding his broker. That's why brokers like day traders. They don't like swing traders or investors, because investor buys one time and he stays 10 years, he doesn't do nothing. So he doesn't give no money to the broker, and it's not good for him. So We are just active. When the stock is active, we buy and we leave it going up until we make money. So if the stock is doing nothing, let's say the stock is doing nothing, let's say here. This is $10, this is $9. Now, if the stock is doing like this, we are not going to buy here in this chart. This chart is trending into a range. This is the range. From 10 to 9, you find maybe 10, 8 or 10, 13. It's just zigzagging like this, going up and going down. And people, they don't know what they are doing. So day traders, sometimes they buy, they short, they buy, they short. So the stock is doing nothing. So it's like sleeping. So this stock is sleeping. So swing traders, we are not buying this. Okay? Now, let's go to investors. Okay, let's say this is a stock. So mostly investors, when they like the company, they know a lot about company, about competition. It means when you want to invest, you should know the company. It's not like swing trading or day trading. Okay? You know what's going. If this company going to be bigger and bigger and bigger, you try to invest in it for 5 years, 10 years, or 20 years, or 30 years. Like all the big companies that we have. They were small, they become medium, and then they become big. They don't begin big at the first year. Okay? I will give you an example. Maybe you have no idea. For example, Walmart begins, I think, at 85 cents. 85 cents, I think, in 1983. Just an example. This is where it goes to stock market. It was 85 cents. Let's say now it is 70. Just an example, okay? Here I just show you that the company becomes bigger and bigger and bigger and bigger. From 85 it goes to 70. This is what I mean by bigger and bigger. So the people who invest when the market is 85, they have an idea that this company might be going up, might become bigger and bigger and bigger because it has a better business than the other businesses. That's why it becomes bigger and bigger. Okay? Now, an investor, when he buys, he should wait many years. So this is the problem for the investor. The investor, since there is no stop loss for the investor, the stock can go like this to 17. It can go down to 3. But he is still investing in this company. So it is so hard for investors, because if they succeed, if their business, it means when they buy and the company becomes bigger and bigger and bigger through the years, these investors, they can make a lot of money. Okay? But the opposite side, if you are in the wrong company, the investor will have bigger losses. That's why we have this idea that some investors, they don't invest in companies, like in a company. They try to do like mutual fund. Mutual fund or ETFs. Okay? Because mutual funds, they are managed and the stocks are changing, so it shouldn't be like this. mutual fund shouldn't be like from 10 to 17, from 17 to 3, because there are a lot of stocks. Some are doing good, some are doing bad. So it should be like this or like this or like this, but it shouldn't be that big thing. That's why mutual funds, most of the time, they don't do good as stocks. Some stocks they do so good. So for the investor, if you are an investor, try to think that you have a big risk. If your investment is not doing good, you will be losing a lot of money, because your money is locked into this company and you don't change it. For example, swing traders, when I buy a stock, the second day or third day it doesn't work, so I exit and I find another stock. But an investor, he is convinced that this company will be one of the best. That's why he put all his money and he stays 5 years or 10 years. If he succeeds, he will make a lot of money, like Warren Buffett succeed in some stocks. But if the stocks are bad and he has a lot of money in them, he will lose a lot of money, and this is a risk in investment. So if I showed you all these three kind of investor and traders, okay, now you get an idea that this is what I like, that swing trading is better than both this day trading and investing. Okay, day trading, we said that it is stressful, a lot of directions in the day. You should see news, you should see volume, you should see a lot of stuff. You should have time in the morning to do what you want to do. Investing is you put your money into a conviction company that this will be the biggest thing, and you put all your money and you wait. It might be that you wait 10 years or 20 years and then this company go bankrupt, so you will be losing all your money. That's why they say diversification, and you should buy a lot of companies here and there, not in the same industry or not in the same sector. But the problem is that when there is a bad year, diversification doesn't work. 2008, for example, most of the stocks, even Warren Buffett, biggest investment, they lost 50% of their value. Okay, almost all the stocks they fell. So if you are an investor, you will have the same sort, whatever where you are. Either you are in mutual fund, in ETFs, stocks, whatever you are, you will lose. It's just because of the market that it is all lost. But for us, you can do you can short the whole market, you can do short selling, you can do a lot of stuff to overcome this problem of the market is going down. Okay, so in my opinion, swing trading, following trends, is the best, and because it is easy, it is simple, and whenever you buy something and it's not good, you just exit it and try to buy another thing. This is the best way, not to be with losers always, but to be always with winners. That's why you should stay with the winners and delete or exit from all these losers. Okay, so thank you very much for watching. If you have questions, just ask. Please subscribe to my channel or share it. Thank you very much.